Well, I am here today with Alex Horn, Managing Partner of BridgeInvest, and John Gitman, Partner at BridgeInvest. Thank you so much for taking some time to chat with me. For those who may not be familiar, Alex, can you kick us off with giving us kind of an overview of BridgeInvest?
Sure, happy to do so. Thank you for joining us, Melanie, by the way. BridgeInvest is a specialty asset manager with a 15-year track record of providing risk-adjusted returns for our investors through investments in senior secured commercial real estate loans.
Yeah, and just to add to that, like in terms of the types of deals that we do, we basically focus on three things. We have our development lending, where we're mostly focused on construction of new assets. We do our special situation type deals, which are sort of out of the box, sort of more unique assets and stories. And then the last thing that we focus on, which has really been a growth generator for us, is traditional down the fairway loans, or what we often call bank alternative lending.
So what have the last few months looked like at BridgeInvest?
The last few months have been incredibly interesting time at BridgeInvest. We just surpassed $1 billion in AUM, and that was possible based on a foundation that we've built over the last several years of a very strong platform for doing bridge lending across the nation.
It's been incredible. I mean, the success that we've had on the capital raising front has really been tremendous, and we're trying to keep up on the origination side of the business as well. And I think the fact that we just literally this week surpassed $700 million of origination volume over the past year, which is effectively doubling our capacity from a couple years ago, has been a pretty huge success.
And also, we expanded into the West Coast, which is something big that we did this year by hiring a new originator that's explicitly focused on the West Coast markets. Very happy with kind of how that's coming out, and we're doing our first transactions on the West Coast as we speak.
Now, big picture, John, what are some macroeconomic trends that are affecting the market?
For me, we're really focused on what we're seeing in the interest rate markets. Something Alex and I talk about a lot is, what's the right cap rate? And that's highly influenced by treasuries. And what we're seeing is that treasuries are certainly higher for longer, as many people are saying, but we're a little bit more concerned that they might be higher forever. So we're watching that market carefully and seeing if the cap rates are going to be affected by that.
Alex?
Yeah, I'll add something there more from the credit provider lens. We're seeing that a lot of other lenders are being more restrictive on their financing terms, increasing their spreads, and decreasing their advance rates. So that's definitely making it tougher for borrowers to find the right solutions for their loans.
John, is there any insight or particular interest in a certain asset or sector?
So look, the largest asset class in our portfolio is multifamily, makes up just under 40% of our portfolio. I think the market is actually at a very positive inflection point. We've seen the last couple years be very difficult as sort of cash flows dropped and cap rates increased, really created a pretty negative environment. But right now, the supply of new multifamily has nearly disappeared in terms of new assets being added, and I think it's created a pretty positive environment for rents to start increasing, and I think that there are some more positive years ahead for multifamily.
Now, switching gears a little bit in a different sector, we're hearing a lot about a softening and vacancy when it comes to industrial. Thoughts on that?
Yeah, that's very true and accurate. Industrial vacancy rates have increased to over 7%. And in turn, we're seeing that there is definitely more vacancy and overhang of supply across the market. But as a lender, we're seeing really interesting opportunities to play in that oversupply because we believe in the strong fundamentals of industrial as an asset class for years to come. And we think that this oversupply is short-lived. And we like the opportunity to be able to lend at way below replacement costs right now in the market.
Yeah, and we just signed up a loan earlier this week. That's exactly that story, and hoping to actually sign another term sheet this week. So that'll be over $100 million of transactions in 1 week that are literally the exact story that Alex talking about.
So how is BridgeInvest preparing for the future?
It's hard to predict the future these days. We've had, I think, a trade war and then a kinetic war over the past couple months. Looks like both are hopefully ending, God willing. But look, we're just keeping our head down. We invest in a long-term asset class, and for us, we're just looking to be able to do deals that we'll be happy in, whether we look back 1, 5, or 10 years ahead, and that's where we're focused.
And I'll add that, again, in a market where there's an uncertainty of liquidity and potential market instability, we like to play in a position where we can be a reliable source of investments for our borrowers, and also that we think is a really interesting time right now in the market to be able to originate really attractive risk-adjusted return deals.
Well, this has been a really insightful conversation. Thank you, gentlemen, for your time.
Appreciate it. Thank you.